Is there some insider trading going on with JB Hi-Fi? Paul Rickard says, yes. Is A2 Milk a takeover target? And the inflation number comes in at 0.6%. Should we care? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. All right, Paul, this is your story, mate. You're a JB Hi-Fi man. You were shocked that the price went down, and now you've discovered that the boss of JB Hi-Fi, Richard Murray, is going over to Premier Investments with good old Solomon Lew. And you reckon that some people might have been given the heads up?
I'm going to write a story about this, Peter, but I was on Monday. I couldn't understand why JB Hi-Fi fell 4% on Monday, right?
Yeah.
If you look at the trading history, closed last Friday about $52, opened on Monday at about $49.
Yeah.
Nothing happened over the weekend, got hit hard yesterday, and all of a sudden this morning we find that Richard Murray, who's had a fantastic record as their CEO, has resigned, gone across to Premier Investments. JB Hi-Fi also had a bit of a trading update on their third quarter, which wasn't too bad, but the stock's down another 3%. So my question is, how do you have that the board of, everyone on the JB Hi-Fi board knew about it, everyone on the board of Premier Investments obviously knew about it,
so,
probably a few lawyers and communications advisors knew about it as well, and suddenly JB Hi-Fi is off 10% over the course of last Thursday on pretty heavy volume. I got to think this leaked last Thursday or Friday. We saw selling last Friday, selling this Monday, and selling again yesterday, and a bit more today. Someone knew about this. ASIC needs to look into it because insider trading is illegal. It's against the law.
And if there's anyone out there who knows anything about it, please give us a call and we'll dob them in on your behalf.
I mean, we want a clean market, right? The
little TAB stock player is being ripped off again.
Yeah, it's not a huge case, but there's enough to suggest that this story leaked early and someone took advantage of it, and those people need to be found out and sent to jail because this is a really criminal offence. So I'm quite hot on the collar about it. I'm going to write more about it, but this is not an accident, right?
Yeah, I'm going to call you Jailer Paul Rickard. All right, A2 Milk, a takeover target. It's another one of your stories, Paul.
Well, we've been saying this for a while, Peter. I mean, look, A2 Milk in a world of trouble because of the collapse of the Diageo trade. Market fearing a fourth downgrade. We've already had 3. Yesterday went below hit the $6 mark, a new 52-week low in the stock. Bit of speculation this morning around a couple of companies running the rule over it. I've always said, Peter, at some point someone's going to buy A2 Milk. The two companies labelled were, one was Nestle, and there's a second company.
Nestle's big enough to do it.
Nestle's big enough to do it. Both have their own A2 style product.
Second rate. A2's the best.
This is the global. This is the leading brand in the world, right? And it means there's some value. I don't know whether it's $7 or $8, but
I'm hoping for $10.
The short sellers are on A2 Milk. I still think if you're a holder, hang on here because
it could be a pleasant surprise.
I think there's something in the wind here, Peter. So I still think it's a great company. I've been wrong. We've been pretty wrong so far. But you've bounced today. I'm not surprised to see a bit of bouncing in this sort of stock.
Okay, now final one. Another Paul Rickard story. I've been pretty busy today doing an investor conference, but inflation is out, 0.6%. It was expected to be higher. The annual 1.1%. The Reserve Bank wants 2 to 3%. God, this is a pretty average result.
It is a pretty average result given the Reserve Bank. All the Reserve Bank wants is wage growth, and to get wage growth, it needs inflation. It wants inflation, it needs wage growth to drive it, right? And we're just not seeing it. So 0.6%, analysts were expecting 0.9, 1.1% for the year. Analysts were hoping for 1.4. There's a few one-offs on this, Peter. There's the Homemaker, I think what the grant was called. Home Builder. Has lowered
You'll make a nice
costs,
Homemaker one day, Paul.
But even so, we aren't seeing inflation. So the impact for markets, that's why the market turned around and has gone positive today. It started negative, or spent the first hour and a half in negative, because this means the Reserve Bank ain't doing anything on interest rates shortly. And probably is going to keep on its bond buying program for the foreseeable future.
And what's really interesting, Paul, is that we know there's strong economic growth out there, but if this is inflationless growth, therefore the Reserve Bank may well be able to keep interest rates as low as this to 2024. I don't think so, but it could be some
And as
structural change.
we were discussing in our Roaring Twenties Investor Strategy Day, Peter, and this was actually pretty much the view, I think, of people like Hamish Douglas was saying that even if we have a really strong 2020, he thinks we're going to go back into, more the sort of the growth we were having before COVID, which was fairly subdued, very low inflation, very low interest rates. And I think his reasoning is there, it's all about the power of the disruption that technology is driving. Right?
Yeah, and this disruption is driving prices down, not up.
Yep.
And so that's the interesting thing that, and I'm going to do a story on this, that we as economists can pick cyclical developments, but it's the structural changes that can actually undermine all that history of, so for example, inflation. It's different history coming down the pike if, for example, all this disruption means prices will not rise like they used to, apart from houses.
And so even if we do get a bit more uplift in bond yields, interest rates really aren't going up. So they're not going to go back to 4%. They might go back to 2%. I think that's what he was sort of saying if we sort of crystal ball it for a couple of years. So look, that's a positive for equity markets because where else are you going to invest, right? So this is good news, but the Reserve Bank, I think they might be a little disappointed, Pete. Do they? Is that? Do you think in the corridors of 60 Martin Place, they know such a thing as disappointment? I don't know.
Maybe they do, Paul. Maybe they do. I'm Peter Svitzer.
I'm Paul Rickard.
And we're mad about money.
Shh.